please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
You're with us here on a fresh new edition of Midcap Radar. The market's not doing very much, 10,803. When I say not very much, incrementally not very much. We're up 50 points, so there's nothing to complain really as we wrap up this week. 190 odd points to the Sensex. Just a very quick, brief look at the Bank Nifty, the mid-cap and small cap indices, then we can, move on. Bank Nifty is up 0.19, mid-cap index is up 3/4, the small cap index is up about 1% or so. And I think it'll all be showing up on the advanced decline ratio, which is absolutely fine as well. Actually, the small cap and I think both the mid cap indices are pretty much at the day's highest point, not so much for the Nifty. No impact on this, tariffs being imposed and retaliatory tariffs, at least not showing up on the market here at this point. So, good afternoon.
Hi Prashant, good afternoon to you as well. So let's get started. First up our top stories. Market near the day's high, Reliance and TCS bat for the bulls, while ICICI Bank and Infosys weigh on the index. The mid-cap index outperforms.
Asian markets recover from early lows, shrugging off the implementation of US-China trade tariffs. Dow futures too trends in the green.
CLSA's Mahesh Nandurkar is upbeat about earnings growth, adds that earnings downgrade cycle has not ended yet. CLSA also expects a risk to margins in FY19.
Shares of Dead Networks, Hathway Cable and GTPL Hathway extend losses to hit 52-week lows. They're reeling under the impact of RelGeo's launch of ultra-high-speed fixed-line broadband services. Okay, those are the top stories. Ashwani is with us as always on the top of the show. Ashwani, good afternoon again. Thanks very much for being here. 52 on the Nifty. When I spoke with you last at 11:30, you said, the market's kind of sort of getting ready to trap the bulls. Don't go long above 10,800. Still hold that view, or the market's sort of made you change your mind?
See, if it had made me change my mind, it would be at 10,900. Bank Nifty, if you see 45 points up, IT, if you see 23 up. So it looks like one of those mid-cap markets where there is much greater action on mid-caps. Before we move forward, these textile guys are having the day of their lives, and particularly Raymond, Century Textile, Arvind. So these are the guys who could close at the highs of the day with very substantial gains. So that's something people should look at. Having said that, I think the smaller stocks are again pushing ahead. Now this 10,800, 850 is a tricky zone. You don't want to get overexcited here and then see the market back at 10,550, 600. So that way, this is a pullback rally. If you see the top 15 gainers, most of them are mid caps and most of them are beaten up stocks. So today, Jubilant Food, Bata, HDFC, Bajaj Finserv are down. So that's not a good day to buy the index. Having said that, individual stocks, Canara Bank is a buy with a stop of 244, target of 258. Reliance is a buy with a stop of 970, target of 995. We are buying this because it had a substantial, I think, 45-50 point decline yesterday. And Dabur is a sell with a stop of 378, target of 364.
Ashwani, on that point on textiles, except Century Textiles where there is some volume, there's a decent volume, none of the others show up on the volume list, although I think, as you said, price gains are there.
See, in smaller stocks, volume takes a bit of time to build up. Century is dropped from 1250 down to 860. So, again, Raymond, etc. have all corrected very significantly. But maybe it's got something to do with that cotton, MSP, etc. I'm not sure. But there is some sort of tailwind in this textile space.
Okay, now Tata Motors have come back to this one again and again in the past. It's coming off those levels and bouncing a bit, 4% or so. Any thoughts?
See, 250, 270 is a historical support. But historical supports do get broken unless there is some change that is happening at the company. Maybe you don't sell here, but definitely I don't think it's a buy unless we can at least get past this 280, 300 zone. On rallies, you are better off selling into it.
Bharat Electronics, Ashwani, it's seeing a bit of a move today. November 2017 was at 190 rupees and it fell to sub 100, now at about 110, 111.
you know, we've been waiting for that defense orders to materialize. I don't think there is great progress, and the way it's come off from 180 thereabouts, 180, 185, the bulls are getting tired of listening to stories. So unless there is great action which is going to happen, I don't think BEL is the kind of stock you want to buy. That way Century and all of these guys which don't have great amounts of government involvement are better. Although even BEL on a pullback, can easily see 130, 135.
One last question. Shriram Transport, it closes the week in a disappointing kind of way. It's down. The low was 1,046 after this episode, and at about 1122. No real no real interest.
Well, people are still selling into it. I mean, you cannot have a publicly listed company and use the money to guarantee a private company's loans. I think there is, institutions are getting out. Now, at some point, stock will stop falling, and that is where you look at it. But I don't think anything much is going to happen in the next 2 or 3 months. It needs to, get done with all the selling, and then maybe some buying could be possible.
All right, Daphne, thanks very much for joining in with your afternoon trades. Well, today actually a lot of these auto stocks doing very, very well. In fact, auto and energy is actually the sectors which are buzzing today, and a lot of brokerages have also written on some of these auto names. So Mangalam joins in now to tell us what's actually catching on with these big brokerages, Mangalam.
Absolutely, Sumaira. So we have 3 stocks which are buzzing today. We start with Ashok Leyland. After some underperformance, that stock is moving in today's trading session because Kotak believes that this underperformance is an opportunity to buy. The weakness that we are seeing, the slowdown concerns are there. They're overdone. In fact, they expect 13% volume growth for a volume compounding for the MHCV segment over the next 3 years, and they expect the company's revenue mix to move to a less cyclical segment as against the more cyclical segment over the medium term. 21% EPS compounding over the next 3 years. Warrants a buy with a target price of 160. Goldman Sachs has written on Container Corp, another stock which is buzzing about 3.5% as we speak. They say this company is in a sweet spot due to higher rail containerization as well as EXIM growth. Going forward, the big trigger, of course, for them is the formation of or the commissioning of the dedicated freight corridor. They have a target price of 740 rupees on the Container Corp stock, with a risk that the railways may increase haulage charges. So we need to keep an eye out on that. Morgan Stanley, they've written on Bajaj Auto. That stock has had a good week so far. In fact, their exports grew 65% in June. Morgan Stanley says the re-rating of TVS has shown that the street cares for EBITDA growth more than the margin. So absolute EBITDA is something that the street is focusing on, and that is something they've learned from TVS. According to them, Bajaj now appears to be focused more on volume as well as EBITDA. They expect the company's first quarter revenues to grow by 40%, and absolute EBITDA, they expect it to grow by about 52%. That means the margins will expand a bit, but absolute EBITDA growth is something that they like. What they like more is the company's aggression going forward, and that keeps them away from taking a bet perhaps on TVS or Hero MotoCorp. So they maintain their overweight rating on that stock with the target placed at 37.85 rupees.
This last one is interesting, Mangala, because it's a bit of a googly for people, right? I mean, at some point, people are focused on margins. Some point, people are focused on something else. Another time, something else is important, and the others are relegated to the second and the third place. So it's a moving target, really, right? I mean, what really matters for any particular stock at any given point in time, be it Bajaj or TVS or any of those.
If your top line is growing and your absolute EBITDA is growing, the margins maybe the street may perhaps give it a miss in the near term.
Yeah, I mean, no, I just pointed that out because for the longest time we were told that TVS margins have to improve. Right. I mean, and now
and that is what perhaps they've learned from, and they've learned Bajaj Auto.
Okay, all right, Mangalam, thanks very much. We take a very quick break. The first on the show, we come back and we will speak with a road company, and actually a pure road company, that Paresh Mehta, CFO of Ashok. Okay, welcome back. So the market's up 50 points, so there's no big change there. One of the big companies that we spoke with, and there's a fair bit of interest around it, is Dilip Bilcon. I mean, the stock will come up on your screen. What a fall it had, and now today it's limit up. But no, I mean, the low recently was about 600 rupees, and today is about 690. The daily limit is 5%. I mean, it's not just Dilip Bilcon, although Dilip Bilcon has had a particularly big fall, but most construction and road construction companies have had decent-sized falls. One company which actually is a pure BOT road construction company with some power interests on the side is Ashoka Buildcon. That company has actually fallen the least. I mean, it's maybe fallen the least, or has certainly fallen less than many others in that particular space. Is down 20% off the life highs. The management is now joining us to talk about what business is looking like. Paresh Mehta, CFO of the company, and is with us right now on the show. Mr. Mehta, thank you very much for your time. Appreciate you joining in. I mean, could you run us through what is happening as far as business goes? Usually, analysts, etc., they say, well, a BOT company is more complex, more tougher to understand. It's more volatile as well. For various reasons, we've seen tolls being shut down, problems, etc., and that impacts business. But in this last couple of months phase of the market, we've seen, a company like yours, which is essentially into BOT, doing much better than peers. Just run us through what's happening business-wise.
Yeah. Just to set the things right, Ashoka Buildcon is an EPC company turned into a BOT operator.
Last couple of months phase of the market, we've seen, a company like yours, which is essentially into BOT, doing much better than peers. Just run us through what's happening business-wise.
Yeah. Just to set the things right, Ashoka Buildcon is an EPC company turned into a BOT operator. So it's a 40-year-old company where EPC is the basic core business of the company. We do EPC in roads and power. And BOT is a space which we got into around almost 15 years back. So more than 18 years back, rather. So no doubt the opportunity in the sector appears to be good on both the sectors, EPC business as well as the BOT business. On the BOT business, on the HAM side, that is hybrid annuity model side, a lot is happening. And that is typically showing in the large order book which most of the companies are carrying. We are carrying an order book of almost 12,000 crores, which is almost 4x of our trailing 2018. So things appear to be good. Markets, they are as they are, but the performance from the company side and the tolls which are getting accrued in the past almost 2 years have been quite robust. So things are looking good. Execution is good. And I think we are all looking up to a great wealth creation.
Mr. Mehta, good afternoon. Thanks much for joining in. In FY19 so far, how have the order awards been?
In FY19, nothing significant because most of the orders which were put out were during December and March. The large spate of HAM projects were bid out, and we also garnered in the month of February and March 5 big HAM projects, as well as part of that. We became a part of the TOT project, which was taken up by Macquarie. So in this quarter, this June quarter, no significant bids have been bid out, and I believe that whatever bidding will happen in this second quarter.
Out of this near 12,000 crore order book, how many? What is the size of the HAM orders?
Almost to the tune of you may call it approximately 8,000 crores, 8,500 crores.
So it's the total out of the total, primarily the bulk is HAM essentially, right?
Yeah, the bulk is HAM. So basically, it's EPC contracts which Ashoka Buildcon will execute, and the HAM projects are typically hived under ACL, our holdco company, under ABL, which will invest into the project as equity. So the EPC will go to ABL.
Right. Yeah, sure. You do the execution, the EPC work.
Right.
But
right.
the point, one concern was, and this is true not just with you but others as well, who got very large bulging HAM order books, which is execution. Will you be able to execute on these projects in a timely and an efficient kind of a way? Because you need to, the government puts up 20%, but then you need to invest as well.
Yeah, so these projects from a funding perspective are not a challenge. Total HAM project of 100 rupee gets split into 40% grant by the government. 60% is what the concessionaire has to arrange funds for in the form of equity and debt. So financing is competitive for players like us, is not a challenge. Execution, I think so, it's not a very big, scaling up on the EPC turnover is not a very big challenge, though we need to put the resources in place. But on today's day, that challenge is not at all there.
Well, can this be a challenge? I mean, not just for you, but for the industry, execution? Or you think it'll all get executed in a timely way?
At this phase, from an execution angle, I don't see any challenges. There may be challenges in the sector vis-a-vis financial closures, but I think so they will come over it. The next round of HAM projects will be another bout of a huge amount which has to be then addressed properly by the concessionaires. So the existing position, I think so, is quite comfortable.
Okay. Mr. Mehta, just one final question, sir. When are you due to receive the amount that you won in terms of the arbitration award in Rajasthan? And also, if you could give us a sense of why is it that long-term debt is going up?
So, vis-a-vis the arbitration award which we have disclosed to the BSC, this is a arbitration award for a project done by us for Chittorgarh bypass in 2003-04, and this amount has been, we have entered into a settled agreement with NHAI, and the amount has been received by us already. This is amount already received and will be part of my revenues in 2018-19. And as far as the debt goes, the debt is purely on account of term loans for the HAM projects and the BOT projects put together. And in fact, working capital cycle, our debts are as good as nil, except for machinery loans. So from a debt perspective, we are very comfortable with debt. Our standalone debt is limited to only 100 crores of machinery loans. And our consolidated debt includes term loans on HAM projects, which will get amortized over a period of time of the concession.
You briefly referred to the toll operator transfer, the TOT orders. Our colleague from Delhi yesterday had reported that NHAI is likely to begin the second round of auctions worth some $2.5 billion. Actually,
Yes.
This is not just round 2, but round 2 and round 3. It's going to begin in the third week of July.
Right.
And it's going to go on into August as well. So this is 18 to 20 projects in the next 2 rounds through July and August.
Yes.
Would you be
Yes.
an active participant for these orders?
So we'll have to typically, as soon as the orders come out and what is the composition of each bid, how many projects they club together, and what is the size of the project, we'll decide whether we would be participating in those or not. So it's a time when once we get the list of projects put together. And
What is the big consideration for you for these orders, these TOT orders? The TOT model?
TOT model is you have to put upfront equity, upfront equity and debt. Amount has to be paid to the government. And this amount has to be reasonable enough to be absorbed by the balance sheet. So we'll take the call as we come for that project. In the current TOT project, which we are part of it, we are just O&M contractors and EPC contracts for Makuri. We are not investing any equity in these projects. So equity is totally being brought in by Makuri and the debt is being arranged by them.
Okay, Mr. Mehta, thank you very much. Appreciate you joining in with those details, and good speaking with you, and some understanding on the TOT orders, which are going to be large orders, which will start being bid out in late July. We will take a break. The markets come off a little bit, just a little bit. From the time that we started, the Nifty is down about 12, 13 points, 43 higher on the Nifty. Take a break. We are back and get you more on the other side.
Hi, welcome. You're watching Midcap Radar. Well, a couple of stocks actually doing very, very well from outside of the index. In fact, from the broad markets, look at something like a JN Irrigation. It's up about 6% and a lot of that has actually come through in the last 1 hour. Or GSFC is another one. Jet Airways, Equitas, L&T, Fin. So all of these are stocks which are up about 2 to 5, 6% and doing exceedingly well. In terms of stocks which are actually which have gained significantly through the day, look at something like Ashok Leyland. There, of course, Mangalam was telling us about the brokerage note where they've upgraded to a buy. So that stock continuing to look good. BEL. now higher by about 9%. So that's another one that's rallying in the mid-cap space. What's not doing well today? Well, the likes of Jubilant Food. We've been talking about Shriram Transport through the week. So that's lost 13% now for the week. So that's a casualty on the downside. Other than that, a couple of these names like Dabur or Jubilant Food, Tata Global Beverages, McLeod Russell. So all of these consumption names now down just a tad. But we need to wrap up Midcap Radar. We'll take stock of the market and we'll answer lots of stock queries when we return with your stock. Stay tuned.